Somebody, a firm, or any entity that buys and sells financial instruments. The term may also refer to a person who buys and sells products such as fruit, vegetables, sugar, or wool. For example, an individual who buys and sells cattle is a cattle trader. There are lots of different types of traders. In the world of finance, a trader buys and sells financial instruments. Shares, bonds, futures, checks, derivatives, options, currencies, and bills of exchange are financial instruments. A forex trader buys and sells currencies such as dollars, pounds, and euros. Forex is short for foreign exchange. Market traders sell goods from a stall in a street market. They might sell fruit, vegetables, clothing, electrical goods, bread, or cheese and processed meats. Somebody who has a stall in a street market and repairs watches or mobile phones is also a market trader. Some retailers say that a good and relatively cheap way to try out a business idea is with a market stall. Sole traders are people who own 100% of their business, which is not a limited company. They can keep all their profits after tax. However, they are liable for any losses. If their business goes bankrupt, they might have to sell their home and use their savings to pay off business debts. This does not happen in a limited company. The owners of a limited company, that is, its shareholders, are only liable for the money they spent on their shares if the company goes bust. The Phoenicians were among the greatest traders in history. Initially, they traded with the Greeks, selling glass, slaves, wood, and dyes. Eventually, they exchanged goods with most of the Mediterranean islands and countries in North Africa. They were extremely prosperous because of trade. Phoenicia existed from 2500 BC to 539 BC.